In today's video, we're going to take a look at what the hell is happening in the rental market. Zoopla just released their UK rental market report, and some of the findings in it are ridiculous, with the annual change in rents in the UK, excluding London, being a massive 5%. So with that said, in today's video, I'm going to cover why there's been such a demand for rental properties, especially in cities, what the difference between rental demand and supply currently looks like, break down where rents have increased the most, and tell you how long rental properties are staying on the market for, and ultimately what all of this means for us as investors. Hello people, I'm Jim, welcome to the channel. I'm a property investor who's documenting my journey to financial freedom from my day job. I'll be breaking down everything to do with property investing, investing in general, and getting a better grip on your personal finances. So if you're like me and want to grow your wealth, then please do not forget to subscribe to the channel and turn the notification bell on so you know when I post new videos. As we all know, property prices have been mental, which if you're a new investor like me, it's the perfect time to get involved into property investing.
I like it.
Just think, it could be worse. You could be investing or buying in Richmondshire, where prices have increased 29%. So to say the market has been hot seems like an understatement at the moment. But one thing no one has been talking about is rents. So what has led us to the average annual increase of 5%? Straight off the bat, people are coming back into cities, in particular over the last 4 months. Normal life has resumed for most people, with offices, bars, restaurants, theatres and city centres opening back up, meaning that rental demand has peaked back up, which pushes up rent, with the average rent in the Manchester Local Authority rising by 1.4% in the last 3 months. And over the same period, Birmingham Local Authority has seen rents up 2.5%, Leeds 1.9% and Edinburgh up 2.2%. London has followed the same trend as well, with a rise in demand over the last few months, with the average rent in the 12 boroughs in inner London rising by 2.3% in the 3 months to July. This still means overall London is at a negative rental change, being at minus 3.8%, but has come up since the days of February of this year, where it was around minus 9.8%. Although people coming back into cities has played a big part, seasonality is also massive in the rental industry, with August and the start of September being busy periods as students return to university, graduates get new jobs and families look to move for the new school term, coupled with some renters looking for new accommodation after the summer. Even with this said, this year has been really busy, with demand levels up nearly 80% on the 2017 to 19 averages. So there's clearly lots of demand, with the rental demand being up 19% compared with the same time last year. But can this demand be serviced? Well, the answer in short is no, with the total rental stock being down 13% with compared with this time last year. Like many things, this is double bubble, as the stock of properties to rent has been coming down. Linked with the pickup in demand, it's clear to see why there's obvious pressure being put on rents to go up. The report states that one of the reasons why there is overall lower supply in the sector is since the additional 3% stamp duty was introduced in 2016, there has been a decline in the buy-to-let sector. Even though lots of investors have been purchasing properties over the last 18 months as a potential hedge against inflation, we might start to see this slow down as the stamp duty holiday comes to an end. So the upshot is there's not enough rental stock on the market, which anyone who's been in property for a few years will know. So as much as some people hate private landlords, they fill a massive gap in the market. Obviously, the changes in rent will differ from location to location. So let's take a look at some of the best performing in the UK. In 5th place, we have Liverpool, where rents have gone up 5.8%, with an average per month being £633. In 4th place, we have Sheffield, where rents have gone up 6.1%, with an average of £643 per month. Now, both of these locations are in the top 5 hottest areas in the UK to purchase buy-to-let properties, which I've made a video about, so please check that out at the end of this. In 3rd place, we have Bristol, where rents have gone up 6.3%, with an average of £1,074 per month. In 2nd place, we have Newcastle, where they've increased 6.4%, with the average being £620. Finally, in top spot, top dog, we have Nottingham, with a change of 7.9%, with the average rent being £743. It is certainly a competitive market out there. This can be hammered home even more by looking at the average time between listing a rental property and agreeing a tenancy is now only 15 days, which is down from 20 days in July of last year. But in places like Hastings, Bournemouth and Plymouth, lets are being agreed in just over 1 week. So what does this mean for investors and for the future? Well, personally, I think we can expect to see continued growth in rents for the rest of the year and into 2022. But all of this is based on if we do or do not go back into a lockdown during the winter, which no one will know until we get there. But if we do get no more restrictions, I personally think we could continue to see rents go up, as it's going to take a while for supply to catch up with the rental market, if it ever even gets close. But if you guys have a different opinion, please let me know in the comments what you think will happen with the rental market. For investors, this certainly means there is lots of demand, which is always good news, as no one wants their property sitting there without a tenant in it, and ultimately it would lose their money if that happened. The interesting thing with rent is it's a lagging indicator when prices go up. It normally takes a while for a bullish market to feed through into rents. This is mostly due to the nature of property. It tends to be pretty slow because it takes time for price changes to filter through. Now, it's certainly a good time to be selling or renting properties out, but I would still maintain a good practice by keeping an emergency fund to cover your properties if they were to be empty for a certain period of time. Although it's easy to take your eye off the ball when we are in a bull market, you still need to always protect yourself and make sure you do not get caught off guard. If you guys have enjoyed this, please check out the video I made about whether you should invest into property in 2022. Please do not forget to hit the subscribe button, and I'll see you guys in the next one. Cheers.